We are going to explain the definition of monetary policy and overnight policy rate of PR following with some graphing. As you all know, monetary policy is a set of tools that a nation's central bank has available to promote sustainable economic growth by controlling the overall supply of money that is available to the nation banks, its consumer, and also its business. An overall interest rate is set by our central bank, that is Bank Negara Malaysia, BNM, that determines the rate of interest for financial institutions that lend each other money overnight. The overnight rate is the interest rate at which a depository institution, general banks, lends or borrow funds from another depository institution in the overnight market. In many countries, the overnight rate is the interest rate the central bank set to the target monetary policy. In most circumstances, the overnight rate is the lowest available interest rate, and as such, it is only available to the most credit-worthy institution.
Now is question number 2. Let us discuss why Bank Negara Malaysia's decisions to increase the OPR to 2.75%. As you all know, Bank Negara Malaysia has raised its overnight policy OPR, as known as OPR, to 2.75% on September. In line with expectation for future normalizations of monetary policy as the country's economic growth and inflation gain momentum. This is because at the current OPR level, the stance of monetary policy continues to remain accommodative and supportive of economic growth. The OPR increase comes as Malaysia's 2022 gross domestic product, as known as GDP, growth outlook also continue to improve. In this statement, Bank Negara Malaysia said that the MPC will continue to assess evolving conditions and their implications on the overall outlook to domestic inflation and growth. Any adjustment to the monetary policy setting going forward would be done in a measured and gradual manner, ensuring that monetary policies support a sustainable economic growth in an environment of price stability. NPC's latest OPR rate of 2.5 inches, closer to its pre-pandemic level of 3%, which is widely expected to be raised by another later by this month. In case the labor market conditions and income prospects remain positive, but the unemployment and underemployment will declining further. Nevertheless, the central bank say that the domestic liquidity remains sufficient, with continued orderly functioning of the financial and foreign exchange market.
Clarify how households or firms will be impacted by the rise in OPR. First, households' monthly installment payment will increase. This is especially true if you got loans with a variable floating interest rate policy. Whenever the OPR goes up, the interest rate will increase as well, which in turn increases the number of your monthly installment payments. For example, a 30-year loan at the old interest rate of 2.8% would require the borrower to pay RM2013 monthly until the end of the loan agreement. The 25 BPS OPR hike would cause monthly payments to increase approximately by 3.1% to RM2079 or an RM66 increase per month, meaning that the yearly expenses for the borrower would increase by RM792. Second is the repayment period will become longer due to the increase in interest rate. If the old monthly installment amount is maintained, the repayment period will become longer as interest rate has increased. Third, it would be expensive to borrow monies. Note that taking on a loan after the OPR increase will cost more. Again, this is because of the increase in the loan interest rate. Hence, the affordability to buy a car or or servicing an existing household loan will be limited. Not only that, historically, the banks may be cautious when it comes to approving loans. Higher OPR, it will cause the lower approval rate. Last is interest earnings from savings and fixed deposit will increase. The good news is if you have substantial savings or are investing in fixed deposit, to know that the increase in OPR is something for you to be happy about. Why? This is because interest rate on these accounts will increase as well, which means you will earn more. Perhaps you want to reassess your savings or investment strategy so that you can get optimal returns.
In conclusion, the rising in OPR brings a lot of impact to our economy. It can bring effect to the household, firm, and government. Borrower forced to pay a higher amount according to the new figure. For example, a 0.25% increase in OPR for a home loan amounting to 500,000 ringgit with a term of 30 years will mean a 71 ringgit increase in monthly installment payment. Over a course of 30 years, the borrower will have to pay an additional 25,560 ringgit for the total interest. Besides that, the issue of inflation may be solved if there is rising of OPR. This is because of OPR will cause the interest rate rising also. So, the consumer purchasing power may be decreased.